Let's talk about the G20 and the outcome. So how happy are you what you have achieved during the negotiations?
Well, first of all, it has been a very interesting discussion which has covered a wide range of topics. We started discussing the recovery in the global economy, which is going on as expected in April, good pace, with somehow an heterogeneous recovery across countries. So really there is a divergence between those countries where the vaccination campaign has been successful, is moving fine, there is a recovery in manufacturing, even services and so on, and other countries which are lagging behind either for lack of vaccines or because there are intrinsic difficulties in the sectors of the economy. So the discussion ranged from the uncertainties linked to the vaccination and the risk of a new variant that may really reduce the pace of recovery, and the recovery in world trade, the uncertainty linked to the scars that this pandemic may have left to households and so on. But overall, I would say moderate optimism. At the same time, the achievements, I think, have been substantial on at least two respects. One is this agreement, which many have defined as historic agreement, on international taxation. Basically having a minimum tax for all the countries that are subscribing, which are most of the countries, almost all the countries in the world, to this agreement is very important. And secondly, the redistribution of profits from the large companies, tech companies, involved in digitalization and all the activities linked to that is also a substantial result. So this is a starting point. The second thing is that there was a presentation from a high-level panel that we appointed early this year to somehow give insights on how to be prepared against the next pandemics, how much should have been considered in terms of financial resources to make available for the future. This high-level panel released a report which is very, very interesting and deep, and on which the G20 will start somehow defining a process. Yeah. And this has been very well received by all. The two other issues that we have got is one, a discussion on climate. And climate change has been put as an important priority by the Italian presidency. We have discussed fiscal sustainability, financial sustainability. And the financial sustainability has two pillars. One, which is based on the work of the Financial Stability Board. We need data. We need to have from the corporations disclosures about the emissions in order for all these to be used by intermediaries also to reduce the risks that they may have. And the second is a roadmap on sustainable finance, which has been put together by a special working group, which is now a permanent working group of the G20, which is co-chaired by China and the United States. I think this is a big achievement. Yeah. And finally, we have discussed financial issues, really stability issues linked to two things. First, the lessons we learned from the crisis that we have been in last year, and we saw that the banks were basically resilient and this time contributed to the resolution of problems rather than to amplifying the risks. The sector which needs more regulation is non-bank financial intermediation, and there is an interim report on which we will build during the year on the way to reduce the risk from money market funds.
Great. Let's talk a bit about the variant. You have touched upon it. Are you concerned that the virus variant can actually dampen the economic outlook for Europe?
Yes, there is a concern. There is an obvious concern which has to do with the effect that this may have on trade, and the real world economy is doing fine exactly because we started to trade again. There is an opening of the economies which were restricted from the measures taken in last year, which were necessary, which were accompanied by forced savings, and we would like this pent-up demand to be back in use. Actually, there may be risks that scars remain, that confidence will take some time in a number of countries. So this is one thing. On the other, the investment activity may somehow revive, also because of one dimension that we did not anticipate. It is the widespread improvement in the use of digital activities, technologies and so on, which really may call for somehow substantial changes in the way production is organized.
Let's talk a bit about Italy in that respect, because Italy has also a very large SME sector. So how are they doing, and is the Italian economic outlook like, is there a certain higher uncertainty because of the potential variant also coming to Italy? How do you assess the situation?
Well, first of all, we had a 9% loss in output, reduction in output last year. The first quarter of this year was basically stationary. The second quarter improved substantially, and we are foreseeing a good pace of recovery for the second half, with I would say more than half of what we lost last year being recovered this year. This implies that manufacturing is doing fine, and service sector is recovering, with some particular areas of concern. Clearly, traveling, tourism and so on are still lagging behind. Activities linked to leisure and this. On the other hand, there is a major success on the vaccination campaign, which has improved confidence. You see in this city there is a lot of tourism now, and mobility, which may be accompanied by something we still do not observe, that is the new wave, maybe smaller than the past ones, in contagion. So this is the major risk we have to face. The measures taken by the government to contain mobility and distancing and so on have been successful, I would say, and the death toll now is substantially reduced. So this is a country where results are really positive. We have to work on to maintain them.
Let's talk about the ECB and the new strategy. 2%, you have been in favor of that 2% goal. Does it mean that we are going to see a more accommodative monetary policy stance for longer now? Because now you even have to achieve higher inflation than before.
Well, first of all, I have to say the higher inflation is the result of what we call technically base effects. That is, at 12 months distance, clearly we observe the fact that there are certain items which have increased in prices because of the removal of VAT reductions in Germany, because of the increase in energy prices, which are mostly once-off. And so, yes, we will have a higher rate of inflation this year, but we are not thinking it to be permanent. Secondly, the strategy really sets up a way to proceed. It is not actual measures that are being decided. We will discuss them in the coming monetary policy meetings. But we have decided two things, very important things. The first has to do with the 2%. So it is not anymore a ceiling. It is a target, an aim, and we look at divergences from that up and down with the same attention. It is a symmetric target. The second is that obviously as a central bank we are very much worried about high inflation, so we will certainly avoid high inflation, but we also will maintain our determination to fight the risks of low inflation or deflation. We were successful in fighting them, but there was some de-anchoring of inflation expectations. If you are close to what we call the lower bound, that is where you are in a position where you cannot reduce that much interest rates, because you can raise interest rates as much as you want. well, obviously, with certain limitations. But once you're close there, you really need to have a very forceful policy measure, and this is what we are determined to do, not to stay for longer in this position, but to be able really to convince of our determination all the markets, our price expectations re-anchoring, and therefore allowing, this may imply for temporary periods of moderately higher price changes than 2%, but we are there really to guarantee the re-anchoring, and so this is the determination we have shown.
Yeah, some of your colleagues are calling for lower purchase rates or within the PEP program or reduction of the pace. Would you say that's premature to do so, given the uncertainty?
Well, first of all, we have not discussed this. So we may discuss in public, but it's better that we discuss in the Governing Council. The second is that obviously this is an emergency program which had to do with the effects of the pandemic. The effects of the pandemic are not only on the volatility of markets, but also on the ability to go back to the 2% aim. And therefore, until we are not well somehow moving towards that target, I think we have to maintain all our instruments, and we will discuss them in our meetings. Obviously, this is something that is both data-driven and it's not path-dependent, it is state-dependent. So this is really what we have to do: observe, understand, and then decide.
We're talking about forceful monetary policy action to get inflation back to that 2% target, which is now a firm target. So, but in other words, if you look at inflation now, that means that we still need a lot of support for the next years. Is that a right interpretation?
Well, it is not clear. It is, I said, data dependent. There is still substantial slack in the European economy. This slack is not equally distributed across countries. The Governing Council has to look at the inflation rate in the euro area, not in individual countries. Each country's inflation rates are changes in relative prices, if you want, not in the absolute price level. So we have really to observe that. We are still now projecting inflation to be at around 1.4, 1.5% in the medium term. So this has to be 2% in the medium term. And when it will be 2% in the medium term, we will be glad having achieved that result.
I think analysts are very interested about the ECB's reaction function compared to the Fed's reaction function, because the Fed is actively allowing overshooting for the time inflation has undershot. So how is the ECB's function differing, or is it not differing?
Well, we have discussed at length on this. There are some of us who think that it's different, some of us who think that it's not that different. I think that we are not having a price level targeting. That is, we are not compensating for what we missed. But on the other hand, we look to the future, and looking to the future, we have really to realize whether we are far or not from our aim. And if we are close, as I said, to the lower bound, that is, we can not use our interest rates effectively, we have to do all the rest to be very forcefully going in that direction.
Let's talk about climate issues, because clearly that's one of the big other things in the new strategy of the ECB. So how will climate change policies affect price developments in your view? Will it rather be triggering inflation, or might it have deflationary effects?
Well, first of all, we have to start from the acknowledgement that we still need more work to understand all the channels through which channel affects the economy. And so there is a lot of research and modeling activities which need the data, and we still have to collect much of the data in order to make our assessment. This said, with climate change and the measures that are taken to reduce the risks, there will be transitory, temporary effect. The transition, it will be costly, it may have two effects. The first effect is having, say, energy prices going up and And this is again a relative price change which may have an impact on the real economy. So if the real economy is somehow being affected negatively by that, then we have also to consider that. It's not that we only are considering the risks of higher prices, but there may be at the end the risk of a larger slack in the adjustment, and therefore with that comes clearly an effect on prices. We have to model that. At the same time, we are determined. Climate change is a serious issue, very serious, and so central banks have to take that into account for in three or four directions. The first is that we have large portfolios of our own funds. We, the Bank of Italy, invest billions of euros in every year for our own funds, and we have decided to move in a strategy that really takes these environmental metrics very much seriously, and so we are investing them in a very careful way in order to avoid the brown or non-green investments. I have to say that the returns have been pretty good in the last couple of years and volatility low. So risk return has been excellent. The second is, however, we are supervisors. So we have stability risks both for single banks and intermediaries and the financial sector at large, and therefore we need to have stress tests and all these to reduce the risk for intermediaries, which intermediaries have to use the information they get from corporations, and even the small and medium firms which are not really going to provide a lot of information but should be invited to do so in order also to get better conditions in their financing, and that has to be taken into account for financial stability. Monetary policy is conducted purchasing assets and refinancing banks. In refinancing banks there is collateral, and this collateral has to be of a particular quality, and in purchasing assets from corporates, again, we have to look at which kind of corporates bonds we are going to buy. Now, the issue here is that it will be a process. It is not going to happen from day to night, from night to day. Tomorrow, we will certainly move fast, but it will take time. At the same time, we should not expect that all the climate change issues are solved by central banks. The role of central banks here is, we cannot determine the changes in climate and the reduction of emissions. The governments have to do. So the role of central banks really is to go and join the governments in their effort, but the democratic legitimacy of raising taxes, of introducing new rules, regulation, of providing incentives or reducing subsidies is with governments. And so this is something that, if we don't say it explicitly, risks to leave the central banks with something which is clearly not in our mandate directly. It is something on which we will work very hard, but we have really to deliver on our main objective of price stability.
That brings me to a point that some people here told me that in order to really fight or to really support the recovery and the pandemic recovery, central banks and the fiscal side needs to cooperate during the next years, and also to get that big transition on the road for the Eurozone. Do you think we see more cooperation between the fiscal side and central banks?
Well, this is the major achievement, I would say, of the last year. We are discussing again the policy mix, if you want. In this condition, with the slack in the economy, clearly the two can and should go hand in hand. So really a lot of cooperation, and the achievement has been substantial. This we have got out from what could have been one of the permanent major disaster in the history of humankind, thanks to the fact that all these policies have worked together. But it is not sufficient, because stabilization provided by the monetary policy, which has been very fast to react, and fiscal policies, which are also being extremely accommodating, have two main consequences. One is on the fiscal side to provide an increase in deficit and debt, and therefore we have really to be able to caution our future with respect to the way this debt is going to develop. And the reason for the second point is simply that one of the best things to do to reduce the weight of the debt is the debt burden is to return to sustained, and in this case sustainable rates of growth, which implies the structural measures. The other kind of policies which we always say with this catchword structural, but mean reforms in competition, reforms in the technological change, reforms in the, and therefore innovation, the labor market which has to adjust, education policy, and so on. All these have to work together to produce an increase in the ability of the economy also to pay back the debt, but also to give jobs.
Yeah, are you concerned about that level, which Italy especially will be settled with after the pandemic?
We obviously know that there is a substantial attention to be paid to the debt levels. They are sustainable. There is no, on one side, interest rates, and the difference between rate of growth and interest rates goes in the right direction, plays favorably. On the other, the recovery plan that we have put together, which is also called the resilience and recovery plan, has a number of measures that should support higher rates of growth. But obviously, I always say that politicians have to look to this over time with a longer horizon in mind, and therefore this is something that has to be stressed repeatedly.
One big other project is the digital euro. Will that be important also for digitalization of the economies? Will that support the growth trajectory you're aiming at?
Well, first of all, the world is becoming digital, and not only the real economy, but also financial side of the economy. There are these monies, digital monies that are proposed, are being somehow designed and so on. We have now the outside money, the cash that is produced by the central bank, and the old-fashioned inside money, the deposits, that the money is created by intermediaries. But then we have also electronic money, the cards, so we have cash, cards, deposits, and transfers and so on. And there will be certainly, I think, a push from the private sector on digital money. I think what is important is the central bank footprint, because the central bank provides one thing which no other can provide, which is trust. And it is so one of the reasons to be so much engaged in central bank digital currency is really to provide a safe asset, a safe currency, and at the same time provide confidence in the monetary system, and with that even confidence in the private money. So this is the endeavor we are in. We are doing a lot of initial work, preparatory work. We will decide the next Wednesday in the ECB Governing Council how to proceed in the experimentation phase, but I think this is something that will be there, and the issue is about when.